I'm confident that the shares will get a re-rating in the marketplace, as likely as we will likely be Canada's newest silver and gold mining company. When that re-rating occurs, I'm a little fuzzy on that. I don't know whether that happens when we first start trading, or whether whether that takes several months and we're closer to putting material through the material, or through the mill rather. But I think that's an interesting notion for your listeners.
Hello, and thanks for tuning in. I'm sitting down with James Anderson, Chairman and CEO of Vangold Mining. James, first time on our show. Great to have you here. How are you doing today?
Yeah, really good, John. Thanks very much for having me on. Thanks for the opportunity.
Yeah. So 2021, off to a big start to you, I guess, or big end in 2020 and big start in 2021. This is your first time on our program, so why don't we start off with you giving the audience an overview. What is Vangold Mining? What's the investment thesis here?
Sure. So Vangold owns a past-producing silver and gold mine in Guanajuato, Mexico, which is right in the center of Mexico, in the heart of Mexico, and one of Mexico's very old, very famous silver and gold mining regions. That asset is called El Pinguico, which was Guanajuato's highest grade mine about 110 years ago, when the project was in a company that was listed on the New York and Boston stock exchanges. Towards the end of December, on December 18th, we announced an LOI with Endeavour Silver Corporation to buy a nearby mine and mill that they closed down about 14 months ago now. And this will, from Vangold's perspective, this will transport us into the realm of being a small silver and gold producer very quickly. We hope to be able to be passing material through that mill by July or August of this year. The two assets, the two mines, are about 8 kilometers by road away from each other. They're about 5 kilometers in a straight line, and it's a big transformative deal for us, and will change the company inherently.
So, okay, I mean, obviously that's the big news to talk about. So let's unpack that a little bit further. First of all, whose idea was this? Who approached who to buy the complex?
So that's a great question. It's ironically, it's not easy to answer, because it kind of unfolded onion skin over a number of months. We began talking to Endeavour a year ago at least, regarding perhaps toll milling some of the material that we have ready for delivery at El Pinguico. Out of those discussions, we ended up doing, a bulk sample in June of last year at Endeavour's other mill in the area called Bolantios, which is about 28 kilometers away from our El Pinguico asset. So in doing all that, and in becoming better acquainted with Endeavour, they came to realize that we were serious about getting into the mining business. We, I think, enjoyed the intercorporate relations between the two companies. Also, one of our directors, and a fellow who's going to be our chief operating officer, Hernan Dorado, he's friends with Endeavour Silver's VP of operations for Mexico. So there's always the personal element within that. And then about 6 months ago, Brad Cook and I had an initial meeting, and he suggested that we have a look at El Cubo. They had shut it down about 8 months earlier, and that he suggested that it might be a really good fit for us and the size of operation that we can put together.
Okay. So before this deal was done, did you have a plan around processing the material at El Pinguico at the existing operating mill, Bolantios, or was there ever any discussions before you got into this, the binding agreement to purchase the asset?
Well, we had half a plan. There's not only that mill that's operating in the area. Between Bolantios and us, there's another mill that's owned by Great Panther, So, we had some preliminary discussions with them about the possibility of us using that mill for processing some of our material and what they would charge us, how that would work. There's also another mill in the area that's immediately adjacent to El Pinguico, which was operational from 1972 up until 2002, with the owners of the mill operating it, which is Peñoles and then Fresnillo. They spun Fresnillo out of Peñoles earlier, but it was operating on various lease agreements with different parties from then up until about 2015. So we had a tour of that mill about 18 months ago. And at that time, Fresnillo was adamant that they would be back in production there by March of 2019. By March of 2020, last year. For various reasons, that has proved not to be the case. So that mill, although it is right next door to us, I mean, it is literally 2 kilometers from Pinguico, it remains shut down, and the exact timing of Fresnillo starting that remains kind of up in the air. So when you say plan, we had a number of different ideas about how to approach that. We didn't, I can't say that we ever came to a final agreement with any one of those possibilities.
Okay. And when Endeavour approached you about this deal, what did they give as their reason for why they wanted to sell it to you?
Well, I guess it's the way that you asked the question. Really, there's 2 tangential ways to answer it. One is why they closed it down, and one was why would they think that we would be interested in it? And they thought that we would be interested in it because we kind of kept knocking on their door saying, hey, why don't we process some material through Bolantios? And they kept telling us, well, that'd be great, except Bolantios is already full, and we don't really want to displace some of our material, Endeavour's material, with material from Vangold, right? That's reasonable. From our perspective too, there are 4 mills, in more or less operating condition, within 28 kilometers of each other, or 28 kilometers from Pinguico. So we had a number of different ideas. Bolantios is the furthest one away, and transportation costs are an important element of profitability. So although we wanted and enjoyed working with our friends at Endeavour, it wasn't really the optimum place to be sending our material.
8 kilometers away is a lot closer.
Right, and exactly. So 28 kilometers versus 8 by road, and it really does make a lot of difference. The other inherent part of your question, I think, really is, so why is El Cubo available for sale? Why did they close it down originally? So a couple of things about that. First of all, the last time that this asset changed hands was in 2012. And our friends at Endeavour paid $200 million for this asset. They paid $100 million, those are US dollars. They paid $100 million US dollars in cash and $100 million US dollars in their shares to buy El Cubo. And that's a lot of money. And I think that it's inarguable that perhaps they overpaid. If I can be so bold, I'm always cautious about saying anything negative about our friends at Endeavour, but people make mistakes from time to time. That they then put an awful lot of money into El Cubo to try and expand the thing. And the whole notion, John, was to try to expand the mine, to make it a bigger footprint in the mining world. The problem is that El Cubo is a very typical Central Mexican high grade but narrow vein system. And so you're taking 1.5 meter wide veins. What Endeavour wanted to do was to mine that on a much larger scale and to generally use 4-meter stopes in mining it. So if you do that, what you end up doing is putting a lot more throughput through the mill. So that sounds good. But if all that you're doing is adding more dilution to that, well, then, on a cost per ounce basis, that doesn't work so good. So, a couple of points about that. One of the reasons why I think our friends at Endeavour no longer wish to pursue El Cubo, is they view it that even if they mine the thing differently and put throughput back to where we think it should be, which is at about 750 tons a day, that will no longer about half the capacity. That's right. And for us, we're going to be able to draw not only from El Cubo, but from also Pinguico. So we're going to be very comfortable in our ability to be able to drive 750 tons a day on an ongoing long-term basis to the mill. From Endeavour's perspective, it's a big company now, right? So, I mean, it's got close to a $1 billion market cap. And I think from their perspective, and I'm cautious about putting any words into Endeavour's mouth, right? But I think from their perspective, they simply say, well, there's no way that El Cubo can really move the needle for them. Even if it's running efficiently, maybe at a smaller scale, it's difficult, to move the needle for Endeavour. For us, on the other hand, it can move the needle greatly because it can propel us into the realm of producing silver and gold company very quickly. Right.
So yeah, it makes a big deal to an emerging gold producer versus an established gold producer.
Right.
Yeah. Okay. So, I mean, we have the highlights of the deal here. I mean, did you want to talk about the way it was structured at all? Half of it is in cash upon close, half of it, or a good part is in shares.
Yeah, so I think I think this genuinely is a win-win kind of solution for Endeavour and ourselves. We paid them $7.5 million cash on acquisition, of which we've paid them $500,000 as a down payment. The rest of that we hope to close in mid-February. We'll say that. They get a large portion of our share capital. So even with the upsized financing that we've announced yesterday, they will end up as our largest shareholder, and they'll end up owning about 12% of our company. And I think from Endeavour's perspective and our perspective, we get a very strong supportive shareholder. And what they get is the ability to have those shares gain value as we execute this business plan.
Right. And are they locked in at all, James?
Yes, there is a 12-month prohibition on them selling any of the shares, as well as for 24 months they vote with management of Vangold.
Okay. So, I mean, I think this is a good time to bring up the cap structure of the company. I believe today, you're not trading right now, but as of today, you're sitting around 110 million when this is all done, based on the announcements you've made. So, starting in December, kind of concurrent with El Cubo, you announced $7.5 million you were raising. That's been upsized twice, so you've obviously got some pretty healthy demand there, which has got to be good. So you're almost double now. I think 14.5 million, correct?
Correct.
Yeah. So this is going to leave, like, let's talk about where this leaves the company when assuming this all closes according to plan. Where does that put you capital wise?
Right. And assuming according to plan, I think that's good for your listeners, for your viewers, for us to be able to talk about that. Maybe we can just go back to the previous slide for 1 second. So it's pro forma, and I just, I want to caution all of your viewers. This is after the transaction closes, after the financing closes, which again, we expect for both of those things to occur mid-February. So if those things all happen, we'll have about 180 million shares issued. Endeavour will be our largest shareholder. Mermacan Capital is a precious metals fund out of Connecticut, and Dan Oliver runs that fund and is on our board of directors. So they, very supportive, and they will be our second largest shareholder. Other directors own almost 6% of the pro forma cap page, and then a number of other funds and supportive shareholders. So that's what makes up the capital, but also 60% held in the hands of the public. And I think you can see prior to the venture exchange insisting on a long halt, our shares always trade well and have good volume, have good liquidity.
Mm-hmm. So I remember reading in the news release that insiders, certainly on the first announcement at $7.5 million, were taking down 25% of the financing. You've upsized the financing now, like we said, almost double. Has the insider participation scaled with that, or is it set at where it was when you first announced it?
Yeah, it's mostly scaled. It'll be about 20% of the upsized financing.
Okay. And is that coming from Mermican mostly then, or?
The lion's share of it, yes, sir.
Okay, so that's got to be a nice vote of confidence for you.
Yeah, a great vote of confidence. Dan Oliver is extremely supportive, but so are all of the other directors. So are the rest of our advisors who show up there as Vangold advisors. The three people on our advisory board, very supportive and also large shareholders of the company.
Okay, and in terms of, I mean, you've upsized it twice. Was there any? Are you still cutting it off at this point, or was there more money that you could have taken that you're not going to take, or was?
Yeah, it's a high class problem, right? And it's a real juggling act and balancing act. So on the one side, of course, well, we don't want to dilute the thing, ridiculously at one price, and there have been shareholders who have said, well, why don't you lay off, let the stock trade, maybe it can go higher, raise more money later on. And balancing that with the age-old adage in our business, well, if the money's there, you'd better take it, because when the money's not there, it can be a long wait in our business before the capital markets open up to allow you to take in more money for your business. For us too, I will tell you, I'm very confident in our business plans and in our strategy. I'm very confident that having these two historic mines feeding one centrally located processing facility, that is a really good idea. What we don't want to do, as many junior mining startups have done, is run out of money in the first 12 months. Yeah. So I'm much happier erring on the side of having more money than we need, rather than, oh, well, we've just got enough, right? Yeah. So that gives you some background to it. We've been turning people away from the private placement for a while. And so that's where we've settled on, and I think that's where it'll stay.
Okay. And so on the topic that you just brought up, James, talking about cushion or cash cushion, so this is showing, a pro forma expectation around 18.5 million when this is all done. How much of that is allocated or budgeted to get El Cubo back online and, do the development work you want to do at El Pinguico? And then what are you leaving as sort of your cushion?
Right. So a couple of points about that. So first of all, what you're looking at here is a source of financing all in Canadian dollars. So everything's been translated into Canadian dollars. And I like to say little baby Canadian dollars, because when you translate them into US dollars, which is generally what mining companies have to spend around the world, they shrink by a factor of 30% really quickly. So that's thing one. Also, the balance for working capital line item that you're looking at here, those are gross numbers and doesn't include all of the costs of financing for the equity portion of the financing. So all of those caveats. And then we are in the process within just the next few days of being able to get a draft PEA from Behre Dolbear. That's the U.S. engineering firm that we've hired to do our preliminary economic assessment. So we'll have that, and we'll be able to discuss with more definition exactly what all of this is going to take to rework. But certainly it'll take $2 to $3 million US kind to refurbish the mill. The mill's in very good shape. I was in Guanajuato for 3.5 weeks in November. I got a chance to tour the mill with the engineers from Behre Dolbear, as well as all of our internal due diligence people. So the mill's all in very good shape, but it's been sitting idle for 14 months. So just as you have an old car that sits in the garage for 14 months before you take it out on the highway, you are going to want new hoses and belts and filters. We'll have to replace the linings in the ball mills, for instance. So a number of different things, and that's going to take 4 to 6 months to get all that accomplished. But I would, again, for your listeners, I would like to juxtapose that on the years and years that it takes to get approvals, first of all, environmental and social approvals to put a new mine in production, all the capital that it takes to build a new mine and mill. We don't have any of that. This is it's in very good shape. It needs a little TLC, but by July or August, we hope to have that thing ready to take material from Pinguico and from El Cubo and start processing mineralized material through that mill.
Okay. And like you said, you did a tour, and some of your other, engineering group did a tour, so there shouldn't be any sort of negative surprises that you weren't aware of ahead of time, I'm assuming.
Well, yeah.
You never know. I know you never know with these.
Maybe you're more optimistic than me. I mean, I can tell you this: we're in the mining business. I can guarantee you that there will be a negative surprise or two laying around here and there, and therefore, once again, that's one of the reasons why we want the capital. Yeah. So when I get the call at 4 a.m. saying, oh, hey, by the way, that ball mill just broke down, I want that to be an irritation and not something that throws a monkey wrench into our whole business plan.
For sure. Okay. So what do you think you'll have for a cash cushion once all the
if everything that we're looking at on this pro forma post transaction and proposed financing page looks right, I think we'll have $6 to $8 million. Pardon me. I think we'll have $8 to $10 million as a cash cushion.
Okay. And was there any significant new money that came in, obviously outside of Endeavour, new big shareholders that you can discuss, or was this mostly like existing shareholders supporting?
A lot of new shareholders, but a really big retail component. And a lot of people in our industry kind of shy away from taking in retail money because it's a lot of hard work. But there's a lot of retail participation in this, and we welcome that. I think that there's no better shareholder than an intelligent businessman who's looked at the business, looked at the proposition, and said, "Yeah, okay, I'm going to write a check for that." So big and small, lots of new retail shareholders. There is, and it shows up on the cap structure pie chart earlier. There's a shareholder out of Australia, very wealthy group. That's the VBS Exchange. They put a gold mine back into production in Australia. So their group has that background, and they're able to intelligently and professionally analyze this as a business. And they were they participated in the 15-cent round 8 months ago, and in this round again as well. So they've got a 5% holding, and there are some other chunky investors as well that don't really show up on this cap structure page.
Okay, I did want to talk about the credit facility or the loan facility you're doing with the Swiss group.
Right.
It's an interesting structure. I believe they're going to loan you $7.5 million US, I think.
US dollars. That's right.
And you pay them back in actual gold and silver metal.
That's right. That's right. So it's not wholly innovative. It's not wholly brand new. There's other examples of that in our industry. However, I like it a great deal. We get to draw down that money at a time when we're going to be spending a bunch of money to develop some of the resources at El Cubo and Pinguico and refurbishing the mill. So we're able to avail ourselves of that capital. We pay them back after a 6-month grace period. Okay, so again, it envisions
4 months.
That's been renegotiated.
Oh, it's been renegotiated. Yeah. Okay. And
there's a couple of points about it that are still that we're still ironing out with that group, and what we expected. We've got an LOI signed that with them we will have a more definitive document within the next few weeks as they do their due diligence and we come up with final terms. But I think I'm okay saying this morning that it will likely be a 6-month grace period.
Okay.
And that gives us ample time to get up and running, to get material going through the mill, and get because we don't produce gold and silver, we produce a concentrate and then sell that concentrate to a refiner. So, there will be some ongoing delays in getting repayment, and we can direct gold and silver on a monthly basis to the repayment of that loan facility. So in total, an 18-month facility, and then we're done. And I think that, that's a good spot to be in. It's a good part of the capital structure to have, I think, if you're a Vangold shareholder.
Mm-hmm. So the way this would work, and the 6-month grace period sounds a lot better because, again, I think as we've already talked about, there can sometimes be little ghosts in the equipment and these plants that you weren't expecting. So what, you thought it was going to be 4 months, now it's 6. What happens if, for example, and I'm assuming the clock starts when you draw down the amount.
That's right.
I'm guessing it's drawn down in full, and then the clock starts ticking. What happens if after the 6 months grace period, you're still not producing or have shipped concentrate yet?
So with it, and that's part of the the issues that I'm talking about having a complete definitive agreement between the two parties, so that there will likely be some sort of penalty or a force majeure clause, so that it doesn't negatively impact Vangold in some kind of detrimental manner.
Okay. So, you mentioned earlier the plan is to go into production in 2021. Hopefully.
Actually, John, can I just make one more point about your last question?
Yeah.
Because with the entity that we're dealing with under usual circumstances, they're providing capital, for a company like ours to actually buy the asset and then get going. It's a little bit different with this because we're going to have the equity capital to do that, and so that 6-month time frame is even longer than one might think, because we won't necessarily draw that money for, let's say, 2 months after we buy after we complete the transaction to purchase El Cubo. So we'll have a good long period of time to be able to be confident that we're going to be producing silver and gold at that time. Also, the current repayment structure, at no time do we ever need more than about 1/3 of the production of gold and silver that we anticipate during that period to repay that loan. So we do have a lot of maneuverability, a lot of malleability with that facility on a go-forward basis.
Yeah. So I guess you've, in theory, given yourself the ability to be nimble here and flexible.
Exactly.
Yeah. All important, comes in handy. You never know. Plan is to be in production 2021, hopefully this summer, producing concentrate. Who do you have lined up to run the operation? Obviously, the summer, what are we, 6 months away from that? That sounds like a fair bit of time, but it goes by quickly. Are you already sort of in the process of getting the team together? The folks?
Yeah, we are. I can tell you, it doesn't sound like a whole bunch of time to me. It sounds like next Tuesday to me.
Yeah.
So, importantly, I think I mentioned Hernan's name before, but Hernan Dorado, Hernan's worked all over the world, in Australia, in Canada, throughout Latin America. He's on our board of directors. He's a mining engineer, but importantly, a graduate of the University of Guanajuato, which is a famous mining school in Mexico. So he will be our chief operating officer. Mine manager will be his father, Gerardo. Gerardo's been on our team for several years. Is our country manager. All of the nuts and bolts about doing the 1,000-ton bulk sample from June, all the nuts and bolts about getting down to the bowels of El Pinguico, which is a 110-year-old mine, and all of the tricky safety elements of that. That's all Gerardo's work. So he'll be on our team. Lately, we have hired, by lately in the last 3 months, let's say, Gabriela Ponce. She's our head geologist at El Pinguico. She's got 11 years experience in the Guanajuato area, but 5 years experience at El Cubo. Same thing with Antonio Neto, 5 years experience at El Cubo. We've also just hired for now, on sort of a half-time basis, the ex-human resources head from El Cubo. So in his Rolodex, he knows all the guys that used to work there. how many of them we're going to hire back, and at what time. You know, we do have that 6-month period, and I think that that's enough time to be able to populate everybody that we need effectively.
Okay. And I guess, yeah, drawing on that experience is obviously important, especially as you're restarting a mill, you know, having the guys and girls on the ground that actually know how the place operates will come in handy, I'm sure. You know, the bulk sample you did last year, you ran that through the Bolantios mill. Are you confident that you'll get sort of similar results in terms of recovery and operation at El Cubo? Are they sort of substantially similar? Are there any key differences there?
They're substantially similar, and you know, I'm not a metallurgist, but all of the processing that takes place in the Guanajuato area, all of the mills are sort of standard flotation mills, and there's little differences here and there to be sure. The recoveries, and it's fantastic to be able to draw on Endeavour's reported results for a number of years. Generally, they got between 85 and 87% recoveries of gold and silver from El Cubo, for years and years and years. So that's pretty good. The recoveries that we got from our bulk sample were lower. There's two different reasons for that, really, and lower. I mean, we did get 75% for gold recoveries and better than 60% for silver. So I mean, they weren't bad or detrimental in any way, but can we do better than that? Yeah, I think we can. The reasons that they were a little bit lower, the material that we were using was waste material 110 years ago, and it's been sitting on the surface for 110 years. So it's certainly weathered, a little bit oxidized. And I say a little bit because there was never a whole bunch of pyrite in the material to begin with. But along the fractures of the rocks, you can certainly see oxidation, throughout. So it's a little bit oxidized, which is a bit of a chance. When we went into doing that bulk sample, there were intelligent people in the mining business who said to me, "Well, James, that stuff's not going to float in a flotation mill if it's all oxidized." Well, that's that just isn't true, and we proved that to materially be incorrect. So we got good results from that. The other reason why we can get better results than that from Pinguico is simply because we only had 3 days processing 1,000 tons to try and make a couple of adjustments to our particular ore. So obviously, owning our own mill, we're going to be able to make that adjustments, right? And we've, as part of our due diligence team, we not only have a contracted metallurgical expert who worked with us during the 1,000-ton bulk sample. So he'll be, available to us to, make any changes and make any recommendations that we might need. But we also had on site during our due diligence the guy who built El Cubo, at least the modern version of it in 2013. To be able to, tell us exactly any changes that we might need for the Pinguico material.
Okay. And any permits needed before you start production, or it's just the, refurbish the mill and get going?
It's pretty much refurbish the mill and get going. We've done this as an asset purchase, so we not only buy, all of the assets of El Cubo, but we buy those permits as well. Those are transferable, so that's good. In terms of hauling material from Pinguico, we don't really need any additional permits for that. All of the permits that were necessary, we got prior to our bulk sample in June, so that's all set to go. There are blasting permits that are difficult to come by in Mexico, and are not transferable. So there's a number of different types of blasting permits, and there's different paths to try and get those permits. So we are basically going down all of the paths simultaneously to be able to make sure that that's not a bottleneck.
Okay. I wanted to pivot to El Pinguico. We didn't really, this is probably fresh for a lot of people that might be viewing, but So this is an old mine, as you mentioned, that was in production over 100 years ago. Can you tell us a little bit about what we're seeing? Because I know you have a stockpile of material on the surface that you can feed, as well as an underground stockpile.
Right. So for the non-mining folks that might be watching, what you're looking at here is a cross section. So we're looking sideways into the side of a hill. All of the lightly sketched white lines that you see, those are old workings from the mine from 100, 110, 120 years ago. Once again, this was a very high-grade mine in its day. Something like an ounce of gold equivalent per ton is what they were mining, right? And it's kind of difficult to compare apples and oranges. Price of gold and silver were different, and some of their reporting was different. But the reporting that we do have, including the annual report, the 1909 annual report of the New York Stock Exchange listed company, gives us a real insight into how profitable the thing was. They were paying quarterly dividends for many years. So the image that you're looking at, that frisbee that you see, that sort of light blue frisbee up to the top left, that's our surface stockpile. So that was waste 110 years ago. They simply discarded that material, but it's got gold and silver in it. It's got between 100 and 110 grams of silver equivalent. And we know that because we took 1,000 tons of it, put it through the Bolantios mill, and we got 107 grams of silver equivalent. So it's always nice to be able to do a much larger sample, process sample, and it proves the sampling that you've got back. That gives you a lot of confidence that all of the sampling that you're doing is valid. So that material, although the grade is marginal, it's just sitting on the surface. What we need to do is to get a front end loader, put it on the back of a 20-ton truck, and take it 8 kilometers to El Cubo and pass it through the mill. So in terms of cost of mining, it's negligible, and cost of transportation, maybe it's $6 a ton to move it from here to El Cubo. So that helps us a great deal, because we know that material is there. We know it's readily available. So at the moment that we can throw the light switch on at the mill, we can start processing some of this material, both in order to sort of recalibrate the mill to make sure that it's all working correctly, but also to be able to provide some early cash flow. And your point, John, about okay, are you sure you're going to be able to process some of that material to repay the gold and silver loan? Well, there it is, right on surface. So it's not like we could have or fail to anticipate some underground problems, because that stuff's available for dare I say instant delivery to the mill. Okay. The other blue shape that you're looking at, that exists in that one there. So that's roughly the same size. We think it's about 150,000 tons. And those estimates were made by the Mexican Geological Survey in 2012 and in 1959. So that material's been sitting there a long time. It was never waste. Okay, some people sort of conflate the surface and the underground stockpile material. It was never waste. It was designed 110 years ago as a low-grade stockpile for those miners to be able to use on any day that they couldn't develop and send to their processing facilities 400 tons of really high-grade material. So they would then use this material to augment that. We do that with our modern mines all the time. Try to create a low-grade stockpile off to one side, and we can sort of ship that if we can't get good grade material. For us, though, the 300 grams of silver equivalent that thing grades, that looks like pretty good material. It's also, we don't have to find it. We don't have to blast it. We don't have to mine it. All we have to do is to move that stuff to surface safely. And the safely part is going to require some capital expenditures, but much less than, if we would have to start thinking about stoping it all and, finding it like that. So we consider that more low-hanging fruit.
So what is the plan, James, around getting that out of the mill? Like, you have a couple adits there that are existing. You have a shaft. what's the approach going to be, or what has it been so far?
So I think, we've looked at a number of different approaches over the months, but I think the one that has come to surface, if I can use that expression, no, yes, every pun intended. So the level 7 adit that you see there, it took us several months to get down to level 7 in that centrally located shaft. So that blue shaft that you see, there were, I think it was 30 or 40 meters of debris and rocks at the bottom of that shaft that we had to clear away. And that's easier said than done. That took us longer than we thought it would take. But in the first week in December, or last week in November, something like that, we got down to level 7, and I was there. They only let me down a few days after they first got to level 7, because there can be methane and oxygen issues. So all of that testing was done before I could go down there. But it's pretty cool. There haven't been humans down at the level 7 for decades. And we are now working our way both north and south, so left and right on your screen, clearing away little rock falls, making sure that it's safe, just meter by meter by meter. So out to the left of your screen, which is south, that adit, we've already reinforced the portal, which is open, and we've reinforced it with steel beams and then concrete pillars. So that's all open. So we may well need to expand the size of that adit. It's basically 2 meters by 2 meters now. We might have to go 4 by 4 and make it into a nice modern rampway, but that will be available for us to extract that underground stockpile, where we will have draw points right along the stockpile and simply be able to move that material out and then outside of the mine for further delivery to El Cubo, 8 kilometers away.
Okay, and timeline around when you think you'd be actually moving material in bulk out of that, the underground? What are you looking at?
I don't know. If you would have asked me about a month ago, I would have been able to give you a better, more definitive answer. But I think that our friends at Behre Dolbear are coming up with some alternatives about sequencing, and sequencing our surface stockpile material along with material from El Cubo, and maybe augmenting that and perhaps leaving some of the underground stockpile material for a date, maybe even a couple of years out. Okay. That is significantly different than what we had been envisioning lately. So it's nice to be able to have different engineers have a look at something and propose different ideas about sequencing, about what material is available to us to go through the mill first, second, and third. But we certainly haven't made a definitive decision about that. And there's a lot of moving parts, as you might imagine.
Yeah. So are you going to be doing exploratory work to basically, I believe at El Cubo there is an existing resource that would come with the deal, but a lot of it is in the inferred category, so it would need to be upgraded. Are you going to be doing resource definition drilling and any kind of exploratory drilling at El Pinguico and El Cubo?
So yeah, the short answer is yes. So let me start with El Cubo, and I don't really have a good image for you to look at in this presentation. But at El Cubo, not only do we buy the mill, but we buy about 500,000 tons of resource that exists at El Cubo. Most of that's, there you go. Most of that's in the measured, most of it's in the inferred category, but there is measured and indicated material as low-hanging fruit. There's another 9,000 tons, which ironically doesn't show up in this table, which are tons that have been blasted and sit ready to be mucked out of a stope. So that's more very, very low-hanging fruit that's readily available for the mill. The measured and indicated material that you see here too, we know where it is. It requires blasting and removal, but that's about it. The inferred material, we know where all of that is as well. We will have to either build ramps or crosscuts in order to access that material. But all of that is readily available for the mill, let's say, over the next 24 to 36 months.
Okay. So the feed to the mill, I mean, what's going through first? Is it the surface stockpile at El Pinguico, or is it some of your, the measured resource at El Cubo? What goes through first?
Again, we're juggling with those very questions right now within the PEA and then within a PFS level study that we'll embark on right away. So that because when you're starting an operation like this, you want to know exactly where the material is coming from, on exactly what day and what grade it's going to be, and how all that's going to take place. So we're ironing out a lot of that, but certainly. The surface stockpile material at Pinguico is really important for this operation because it gives us clarity of exactly amounts of material that we can put through, with virtually no capex up front. So that's really important. The measured and indicated material that you're looking at right here, that too, because it's good grade and because it's 500 yards from the mill, that's also very important and will likely go through the mill relatively quickly. And the good grade, of course, John, I don't have to tell you, but all of your other costs in mining are about the same. If you're putting better grade through, that's just money that goes right through to the bottom line. So we will be cognizant of putting a little bit of what my Mexican engineering friends like to call the sugar right through the mill and making sure that we're profitable right from the beginning.
Right. Okay. So Behre is engaged currently in a PEA. Any timeline on when that when shareholders could expect to see the results?
I actually had a draft delivered to me yesterday. It's 168 pages or some number like that. So I confess I haven't gotten all the way through it. It put me to sleep last night. So. Over the next several days, we'll be studying it, as well as our internal financial coordinators. Hernan will certainly dig into all the niceties of it and make sure that we've got a document for the regulators, but also for ourselves, and then also for the public, so that we can announce that if God is good, I'm thinking in the next week or 10 days.
Okay. So, speaking of the regulators, it's probably a good time to ask, what guidance have you got from the Securities Commission or the exchange around when you could be free trading again? Or what milestones exactly do you need to have happen before that, shares are trading again?
Yeah, I wish I had better answers for you. How do I say all this politely? I choose not to.
I know what you want.
I choose not to have too many direct discussions with our friends at the exchange. We'll just leave it at that. They took the position, and I do want to point out something. This is not a BC Securities Commission issue, right? We've made all of the disclosures, right? This is a Toronto Venture Exchange policy.
Okay.
Right? So when they looked at our announcement, they viewed this as what they call a fundamental transaction, and not just a reviewable transaction. Reviewable transaction, they have one set of criteria and how they review it. Fundamental transaction, they dig deeper. Okay, fair enough. So over the Christmas season, there wasn't really anybody at home at the Venture Exchange to do any of the reviewing of the material that they might want to review. What the exact delay is, right now in terms of them reviewing the submittal that we've presented to them, I don't know. I've been in this business for a long time now. And, it's just as in the capital markets, it's always feast and famine. And at the exchange, it's always feast and famine. And when it's a feast, you never have enough people on staff to be able to do everything that you're supposed to be doing. And when it's a famine, well, you got to lay off people because you're not making any money and, like that. So I do have some sympathy for the fact that they're very busy. But, it's our shareholders who deserve to have liquidity in the shares.
Yeah. One thing I did want to ask, I remember seeing in your presentation that you were going to explore at El Pinguico the theory that the mother vein, Veta Madre, I believe,
That's right,
potentially runs onto your property at this, the southern end of El Pinguico. Is that still in the plans, or has the whole El Cubo acquisition changed your focus, just to focus more on the production and development and, push the exploration side out a little bit?
Yeah, it hasn't changed our plans. We want to test that structure. I want to test that structure. I mean, I'm really I'm an explorationist by nature, and although obviously the acquisition of El Cubo was front and center, and this financing and the series of financings and getting regulatory approval for it, that has to be our focus right now. But we can chew gum and walk at the same time. To sort of set the stage, I guess, for your listeners, I mentioned the Guanajuato area as being this 480-year-old mining camp. There were times in the 1700s when the Guanajuato region was producing about 40% of the entire world's silver.
Wow.
So most of that was done on a regional fault structure called the Veta Madre, or the mother vein. And it's a regional feature that can be seen on surface for between 25 and 30 kilometers. It's been impregnated by a very powerful, very long-lived epithermal silver and gold bearing system. And that system is right next door to Pinguico. You'll see the quote over on the right-hand side of this slide. There are 8 different geological reports that were written in 1906, mostly by American mining engineers and geologists and metallurgists of the day. And the reports were written in favor of the New York Stock Exchange listing. But a number of these guys point out the possibilities of Veta Madre crossing our project boundary in very much the same way that we understand it. I mentioned that Fresnillo has a mill and that they were mining right next door to us. Well, they were mining on the Veta Madre from 1972 until 2002 to within 250 meters of our claim boundary. Okay, so do I think that Veta Madre crosses onto the Pinguico claims? I do. I'm very confident of that. Is it mineralized at that depth? Well, we don't know that. And that's why we need to drill it and find out. But where our narrow but very high-grade El Pinguico vein system intersects with Veta Madre, that is a really cool drill target.
Yeah.
There's a famous mine that's about 10 kilometers north of us called Valenciana. And most of that, that extraordinary 40% of the world's silver production from one area, a lot of that came from that famous mine. And interestingly, at Valenciana, they were mining there for 100 years before it became this really, ridiculously wide. They talk about it historically as rooms full of ruby silver, right? So, could we have a similar setup to that? I think it's possible. At the intersection of these two vein systems. So, as I say, that's a really cool drill target. We can't drill this, John, with the underground drill that we've purchased, right? That drill will be used much more for delineating resources underground on the Pinguico structure itself. So we'll get a drill contractor to do that, and I don't have any firm dates for you, but we want to take a shot on that within months, and not wait 3 years.
So it's another potential catalyst then for people look forward to. What are you budgeting for meters to test it?
Probably, well, we've got 3,500 meters in a surface drill program that we would contract out, and I think that I'm always a fan of going slow when you first start drilling these structures. So I think 2 500 to 550 meter drill holes. Let's see if we test that structure on our ground. One thing that's kind of cool. So if I bring my cursor, can you see my cursor right now?
I cannot. No.
No. Okay. So
you can use the drawing if you want.
Yeah. Okay. Cool. So we'll do that. Let me see if I got this. So there is a claim. So hang on a second. So that's about the line of our claim boundary, okay?
Mm-hmm.
But there's a little claim, we'll call it like that. It's this little postage stamp of a claim that's owned by Endeavour. And as part of the purchase of El Cubo, we get 7,000 hectares of mining claims in this area. One of the little claims, probably the smallest of the whole lot, is this one. And it's really a perfect place to drill Veta Madre from our spot. So, you know, we've got these as targets, drilling from the southern portion of our property down where topographically it gets a little bit lower. But if we start from here and drill, well, something like that, or maybe something like that, so that we stay on our claim boundary, I think we'll end up with a more direct, shorter way to test the extension of Veta Madre. If we hit it, well, then, you know, then we get a whole bunch more confidence to spend some more money and follow that down dip.
Right. Yeah. So I guess, you know, how much money you spend and how many meters you put in, it will depend on kind of what those initial exploratory holes will give you.
Right.
Okay. So a few catalysts to look forward to, you know, PEA soon, hopefully retrading, you know, some exploration side, obviously you know, a big change at the company, you know, looking to be a gold producer with, you know, within 6 months, say 6-7 months. So
right.
Interesting to follow your story and see how things go. Any closing remarks you want to leave with viewers today? Where, you know, can they reach out?
Well, just something that popped into my head when you were saying that, you know, catalysts, you know, the stock will be trading. I'm confident that the shares will get a re-rating in the marketplace, as we will likely be Canada's newest silver and gold mining company. When that re-rating occurs, I'm a little fuzzy on that. I don't know whether that happens when we first start trading, or whether you know, whether that takes several months and we're closer to putting material through the material, or through the mill rather. But I think that's an interesting notion for your listeners.
Yeah, it'll be interesting to see. So again, just so everyone knows or reinforce, there's no current, you can't really give a set date or guidance on when it's going to happen. It's just hopefully soon, probably in February.
In terms of the trading, John?
Yeah.
I would be disappointed if we weren't trading within the next 7 days. I mean, there's just, there isn't, to my way of thinking anyway, then I haven't been given any, you know, justification for keeping it halted, you know, dramatically longer than that.
Okay.
Okay. That'll be separate and distinct from venture exchange approval regarding the acquisition, because we need that as well.
Yeah. Okay. And the acquisition of El Cubo, the Swiss loan facility, the private placement, is all, those three things are all supposed to close concurrently, correct?
The placement and the acquisition, yes. The loan facility can close at a later date. Okay.
And again, yeah, because again, you'll have enough money you won't have to draw on it right away. You can push that.
Correct.
A little bit. Okay. All right. Well, interesting times, you know, exciting start to the year. And yeah, like I said, we'll be keeping an eye and following, and, you know, keep in touch. Maybe we can have you on again.
Okay. I'd love that. Thanks very much. This has been, it's been fun and helpful for me, and I hope educational and interesting for your listeners.
Okay. Well, yeah, thanks, James. And until next time, take care. Cheers.
You too.